What's going on, guys? Randall Cornett here. I'm an idiot, and I uploaded the incorrect version of this video. Now I have to redo it because I realized I didn't actually record. I didn't press record on the proper one. So that being said, welcome to the content. I do have something pretty interesting for you guys. I'm going to go over this for, I think, now the third time I'm having to re-record this video. It's a very interesting document that I read, though. It's from our boys at Squeeze Metrics, and they put together a nice little white paper that's basically talking about the dark pools and why short volume is actually representative of buying pressure, why short is going long. So that being said, I'm just going to briefly go through the document and we will read this together. So the first case they make is pretty interesting. A short sell is a sell of a security that the seller does not own. Traditionally, short sells are associated with speculation, traders betting that the stock will go down. But according to the SEC, trades marked with the seller short comprise about 49% of equity share volume. In other words, about half of all selling volume in the market is short selling. Unless we actually believe that half of the market volume is speculative short selling, this demands an explanation. To understand, you need to know how market makers do business. Traditionally, market makers make their money by quoting a spread. This means placing a bid at, say, $19.95 and an offer at $20. Since the market makers have no position in the stock, the offer at $20 is necessarily entered as a short sell. They don't own it, so they can't actually sell it. Now imagine the common scenario where one investor sells to the market maker at $19.95 and the other buys from the market maker at $20. Knowing that market makers place short sells at the offer, we know that only one of these trades will be reported as short, which is the investor buying the stock at the ask, which is $20. So they have a nice little table here and it kind of breaks it down. So investor buys from the market maker, the sell is reported as short. If the investor sells to the market maker, it's reported as non-short. So moving down here, they test their strategy. So we're just going to go into this. What we can hope to find from a test is that high short sell volume is positively correlated to intraday stock gains. Unfortunately, there's no real-time short selling reporting requirement, and so we cannot simply dig through the ticker tape to find the volume of short sales. Luckily, we can use a proxy, and even better, it's free. Ever since 2010, Finner has collected short sell volume data from their trade reporting facilities. The TRFs receive data from exclusively off-exchange or dark venues. Some of these venues are alternative trading systems or quote-unquote dark pools, and some of them are internalizers. Since our analysis doesn't need to distinguish between types of these off-exchange venues, we'll refer to all the data from the TRFs as dark pool data. The only thing that's dark about dark pool is that there's no pre-trade data. There's no visible order book or quoting. That one thing that's particularly appealing about dark pools for the customer is that you can buy or sell stocks between the bid and ask prices, usually at the midpoint. This can dramatically reduce trading costs. For a market maker in a dark pool, and don't be fooled, yes, there are market makers in the dark pool, this changes one thing. Midpoint trades mean, reverse back. Midpoint trades mean spreads become even tighter, sub a penny. But for our purposes, this is irrelevant. The rebate is still king, and the market makers will still buy what's sold to them and short sell what's bought from them, just like they do on the lit exchange. With all this in mind, the only suitability concern about using short volume data from dark pools as a proxy for the whole market is that it just isn't enough data. Fortunately, off-exchange volume accounts for about a third of all trade volume. This should be more than enough to get a picture of the correlation between short volume and intraday stock gains. So what they're saying, when the short volume is up on the dark pool, intraday gains are higher. So our approach to test short volume is simple. First, find the average intraday return, which is the open to close of all exchange listed US stocks. And so what they do is they use that baseline return. They break down those intraday returns according to the ratio of dark pool short volume to long. And what they expect is to see that a higher natural short volume representative of buying activity is correlated to higher intraday returns. So what this graph shows is, you could see down here, this bottom area, this is the short volume, and this blue line represents the dark pool short volume. And this left side indicates the intraday returns. As you could see, as this dark pool blue line crosses into this 20, 40, 60%, you'll see that as the dark pool short volume goes up, the intraday returns also go up as well, which is another indicator of like buying pressure. So what they say is, we think that it's difficult to dispute that higher short volume correlates to greater intraday returns. As short volume rises above 35%, average intraday returns are uniformly positive. Similarly, below 35%, returns grow steadily more negative. So this is that 35% mark where my mouse is. If it's to the left of this, you could see that the price, the returns are not as much. So when the dark pool has higher short interest or higher short volume, it's actually an indicator that the price is actually going to go up, and therefore shorts actually have long positions based off of what the market maker's role in all of this. So it's really interesting to see, and I'm trying to see if there's anything else super interesting. I don't want to read the whole document. Let me see here. Furthermore, the SEC says market participants, including issuers and investors, do not appear to widely monitor or use this data, and data vendors informed the Division of Economic Risk and Analysis that they cannot create products utilizing this data. The division is unaware of the transaction level data being widely used by any group other than academics. Given what we see as potentially valuable information, this may come as a surprise. How can this data be overlooked? Our suspicion is that the explanation is simple. The conceptual link between short sells and investor buying activity, the key is to understanding what short volume really means, has never been clearly drawn before. And so, armed with this fresh understanding, we hope that the reader might feel compelled to explore this new avenue of market data, and perhaps to be more receptive generally to the value of unconventional data and methods in the investment process. So what's really interesting about this too, when they're talking about dark pool short volume going up, it correlating to higher intraday returns and the price going up of a share, I thought that this is pretty important. This side note, right on the first page, it says market makers are exempt from short selling restrictions. Why this is so unique and important to me is because market makers don't have to follow any of the rules when it comes to short selling. So it makes a whole lot of sense that, being that they're in the pockets of a lot of these big institutions and hedge funds, that they're doing a lot of bullshit fugazi stuff that is really not being regulated. There's no restrictions, there's no oversight. So I think that's a big component or a piece of this information. So now, how does this all correlate to AMC and the dark pool indicator? So I'm going to pull that up for you guys. Basically, the dark pool indicator, it shows buying and selling pressure in the dark pool. So I'm just going to break that down really quickly. When DPI is higher than usual, that means there was more buying than usual in the dark pool. This is a simple concept to understand and blindly put into practice, but it's better to understand why it works this way, which it led us to that white paper. The dark pool indicator, DPI, measures out of all trades that are expected on stock exchanges the likelihood of a trade being a purchase or sell. You might be thinking, well, half will be buying and half will be selling, because if there's a buyer, there's a seller. And although that is true, it's not entirely true. Most dark pool trades fill at a midpoint between the bid and the ask prices. That means if the spread is $50 to $50.01, dark pool traders can actually go and hit that midpoint at that $50.50. So while you'll never be able to buy shares of the stock for less than $50.01 on an exchange, because that's the best ask, you would be able to buy it at that midpoint which is a lot cheaper when you're talking about millions and millions of dollars on the dark pool. It says the incentive is in for market makers to seek out liquidity in dark pools to improve their profits from quoting bid and ask spreads. But the effect of this activity is that on often large trades that would have otherwise moved the price by being routed to an exchange simply fill in a dark pool and fail to affect the price. And because the dark pool liquidity is being absorbed by the market maker rather than the market itself, it is theoretically possible for every dark pool trade to be a purchase or sell. When this happens throughout the course of a day or even several several days, sustained imbalances form, price may rise, but dark pool traders may be net sellers. And then sometimes price may fall, but dark pool traders may be net buyers. So it kind of skews the data a little bit. As you can see, this scenario can create huge information gap between dark pool traders and everyone else. In the case of many stocks, price becomes chronically disconnected from a reality as a result. The tendency, however, is for a price to correct as time passes and as information becomes more symmetrical. So what they're saying is like, hey, what's going on in the dark pool, it might not have an immediate effect on what's going on, but generally history says that the market usually tends to catch up to what the dark pool is doing. So that's why dark pool indicators are pretty important, because if you're seeing a lot of buying pressure in the dark pool, or if you see a lot of short, going back to short being long, you see a lot of short volume, that's usually an indicator there's a lot of buying pressure in the dark pools. So the extent of this imbalance is what the DPI measures every day. The opportunity or the risk, especially in cases of extreme sustained imbalance, should be apparent. So if we want to look at this dark pool indicator, let's look at it on an actual AMC chart. So this first, where I'm hovering around on my mouse right around here, this first green candle, this is the initial run up in January. Okay. And if you look at this dark pool volume, which is these, basically it's like I want to say, it's a light blue and dark blue, but look at where the indicator was before it happened, 57% DPI. So all this buying pressure was here. And then all of a sudden you've seen this run up. And so you could see it again. You could kind of see we're at 58% again. Look at, so just like we were at 57% here, we're going back to where we're at now, 58%. You could see this DPI increasing, and boom, we've seen this nice run up. And so what's happening again here, we're hitting that threshold. We're at 45% DPI. This is as of yesterday, and it looks like it's curling up. And then you could see the dark pool volume right here, which indicates that this green bar is the volume right here to the far right. The light blue and dark blue are dark pool volume. So that the dark pool volume actually exceeds the volume that went on in AMC today. Dark blue indicates short volumes, which is long buying pressure. The light blue indicates basically the the selling pressure. So it's about even right now, but I expect that it's going to start moving back up based off of what this DPI is telling us. It looks like the institutional money is flowing heavy towards the bullish side. So that brings me to my next I guess point, which was going to be market chameleon, which we will look at right now. We can look at the overall. Thank you, Nishan, for the subscription that just came in right now while I'm recording the video. But so we can look at the overall dark pool data for the day, which, so if we come over here to trading hours, and market chameleon is where you guys can do this. You can do it all free. The volume in the dark pool was 82 million today, which accounted for 64% of the entire market, which is absolutely insane, right? The average price of what the stock was trading was $54.17 in the dark pool. Pretty interesting. So now let's go over to Black Box, and we could take a look at some of the bigger alerts that triggered today. I did get a trigger alert at 100,000 dark block. So this is a dark pool purchase that went through in the dark pool, $5.2 million, 100,000 shares. They executed this trade at $52.68. Looking at the significant option buys, these are option buys that happened today. They were over $50,000. There's two ones. There's one that's negative, one that's good for us. So we do have a far out expiration date. Somebody bought January 21st, 2022 strike, $145 strikes. They spent $2.36 million on these calls. It got them 1,468 contracts. That's pretty good stuff. And this is probably a far out bet. They'll probably take this, the profits from this maybe early on, but who knows it, depending on what the market does. And then there's somebody that is betting pretty heavy against us as well. Their expiration date is June 18th, 2021. And they bought a strike at $55. And that was an $882,000 purchase. That got them 1,984 puts. So they're banking that we're going to stay below 55 by Friday. So just interesting to see both sides of the spectrum. That being said, I hope that you guys enjoyed the data. It was a quick little video. I didn't break it down fully. There's a lot of information in there, but I hope that was enough to kind of pique your guys' interest. And we'll go from there. So if you guys enjoyed the data, please do me a favor, like and subscribe. It does me a huge favor personally, and then it obviously helps spread the message. So that being said, I will catch you guys on the next video. I love you long time. Peace.